Welcome to ETF Leaders, powered by New York Stock Exchange. I'm Lara Crigger, the editor-in-chief of ETF Trends and ETF Database. And today I am joined by Jordan Farris. He is the head of ETFs for Nuveen. Welcome, welcome.
Thanks for having me here, Lara.
Great to have you. So I know that Nuveen is really big into the ESG space right now. So how are you thinking about the ESG movement right now?
There are a few ways in which we're thinking about the ESG movement right now. I'll take a step back and say that Nuveen has been in this space for nearly 5 decades. So when we came to market with our first set of ESG ETFs 5 years ago, we were leveraging a lot of experience that was already built into that firm. And I think back to the first year when we were talking about those strategies and the conversations that we were having with clients and how we were really explaining what the acronym ESG meant at the front end of all of our conversations. And to see the flows coming in over the last 5 years and the number of new products coming in over the last 5 years, to me is showing that advisors have moved beyond that and they're really understanding what ESG integration means. We're getting a lot of questions asked of us about the index methodology beyond what ESG just means in terms of that acronym again. And we're seeing them have more advanced and deeper conversations with their clients. That is my barometer for where the movement is. It's to the point where people are fully integrating this into their portfolio and being able to tilt to different areas of ESG integration.
Well, let's drill in a little bit more into that. Mm-hmm. So what sort of conversations, let us into the conversations a little bit. What are you hearing?
Sure. And I think this is across both institutional, advisor, and other types of clients that we would be speaking with. Again, 5 years ago, conversation was very much, what does ESG mean? We fast forward to today, and this is where, from a product perspective, I end up being kind of like a kid in a candy store, is we get to be talking about individual securities within the portfolio. Why is this company included from an ESG perspective? Why is the governance score what it is relative to some of their peers? What are the underlying metrics going into that? Why have you included carbon emissions reductions criteria into the index methodology? Those are the types of advanced conversations that we're having now versus 5 years ago. I'd also add that another area that we're starting to have really good conversations in a similar trajectory is with our suite of active semi-transparent ETFs, which we launched last year. This was an evolution of the ETF wrapper, and last year we were having those conversations about the slight differences and what clients should expect from an active semi-transparent ETF versus a traditional transparent ETF. Those conversations have started to go down and we can move on to talking about the underlying investment strategy. So a similar trajectory that we saw within the ESG space.
It's so fascinating. So you have a number of, what you said, active semi-transparent ETFs, and you have a number of ESG ETFs. Mm-hmm. Do you have a favorite ETF in there?
It's hard for me to pick. Can't pick a favorite child. We have 18 products. I love our suite of ESG ETFs. They were the first products that we brought to market. But one I would highlight now is the Nuveen Dividend Growth ETF. Ticker is NDVG. This strategy is not only offered in the ETF wrapper, but it's also offered in the mutual fund and SMA wrapper. It's one of our flagship active equity strategies at Nuveen. It's why we brought it to market in the ETF wrapper as well, wanting to offer investors more choice in how they consume certain strategies, and knowing that investors are, at this point in time, preferring the ETF wrapper as compared to some of the other wrappers. NDVG is unique. It's going to offer investors exposure to companies that are growing their dividends, with the thesis being that these types of companies have been able to produce good total returns with lower volatility over time. The other key feature is dividend growers tend to perform quite well during periods of inflation. So people have clients that are concerned about inflationary risk within their portfolio, and NDVG might be something to take a look at.
Well, it definitely sounds like a fund made for the moment. Thank you so much for your time today, Jordan.
Thanks, Lara.
This has been ETF Leaders, powered by New York Stock Exchange. Thank you for watching, and we'll see you again next time.